If you're new to the channel, make sure to hit the like button and subscribe, because today we are delving into Energy Fuels, ticker UUUU, a company sitting at the crossroads of uranium mining, rare earth elements, and critical mineral production, and one that could be a high-risk, high-reward play for investors in 2025 and beyond. Energy Fuels is one of the largest uranium producers in the United States, operating assets like the Pinyon Plain Uranium Mine, La Salle Mine, and the country's only conventional uranium processing facility, the White Mesa Mill in Utah. From 2018 to 2023, the company supplied over half of US uranium production, making it a crucial domestic source in a sector dominated by foreign imports. On the production front, Energy Fuels is ramping up operations dramatically. In the second quarter of 2025, the company produced 660,000 pounds of uranium, projecting an annualized rate of 2 million pounds at unit costs between $23 and $30 per pound. Additionally, production at the high-grade Pinyon Plain mine averaged 3.51% uranium content in June, significantly boosting efficiency and margin potential. But Energy Fuels is not just about uranium. It has aggressively diversified into rare earth elements and heavy mineral sands. It acquired Australia's base resources, gaining the Toliara project in Madagascar, which includes a long-life, low-cost monazite stream, a potential feedstock for rare earth element separation. The company also expanded rare earth operations at its White Mesa Mill and acquired RadTran, opening the door to medical isotope production. These moves position Energy Fuels as a diversified critical minerals player with the infrastructure to process uranium, rare earth oxides, heavy mineral sands, and even isotopes. Financially, Energy Fuels remains in transition. The company reported a net loss of $22 million in Q2 2025, attributed to weak uranium prices and high developmental costs. It also carries inventory valued at $50 to $55 per pound, which is higher than the projected production cost, creating short-term margin pressure. On the bright side, the balance sheet is strong, with over $250 million in liquidity, zero debt, and assets well above liabilities. This financial flexibility allows the firm to invest across multiple growth avenues without being immediately constrained by financing risk. Revenue in some recent periods has been modest, for example about $46 million in the trailing 12 months, while net losses persisted. Free cash flow has also been negative as the company ramped up projects. Analysts have taken note. Roth, MKM, and H.C. Wainwright maintain buy ratings with price targets ranging from $5.75 to as high as $12, while Canaccord Genuity and B. Riley project $9 to $11 targets. Consensus suggests meaningful upside, especially if uranium prices rebound and rare earth operations scale. Energy Fuels' strategic partnerships provide additional upside. It signed an MOU with Chemours to strengthen US rare earth supply chains, and with South Korea's POSCO to develop a rare earth magnet supply chain independent of China. Through Reddit discussions, investors note that these agreements could power over 30,000 EVs with American-made materials. If successful, that would mark a major competitive shift in the global rare earths and critical minerals market. Operationally, Energy Fuels faces challenges. Shipment from the Pinyon mine was temporarily paused due to transport concerns raised by the Navajo Nation, impacting near-term guidance. The company resolved the dispute by assuming transport-related responsibilities, but it underscores operating and social risk across mining territories. Uranium prices are also in a mid-cycle downturn. Zacks notes declining prices as utilities adjust to supply overshoot, though long-term forecasts expect rising demand and supply deficits. Technically, the stock is highly volatile, trading with a beta well over 1, making it sensitive to uranium commodity cycles. Investor sentiment on Reddit ranges from wild optimism, calling UUUU worth at least $60 per share in 5 years, to cautious as the company navigates both uranium and rare earth markets with evolving execution risk. Looking ahead, Energy Fuels has multiple paths to value creation. In a bullish case, uranium prices rebound sharply, production scales past 2 million pounds, Rare earth operations deliver revenue and the company achieves positive cash flow. In a base case, uranium remains flat, rare earths offer modest lift, and operations stabilise toward break-even. In a bear case, uranium prices stay depressed, rare earth execution falters, and capital burn continues, leaving the stock under pressure. At the end of the day, Energy Fuels is a speculative investment with strong infrastructure, diversified future growth avenues, zero debt, and deep sector exposure across uranium, rare earths, heavy mineral sands, and isotopes. For long-term investors who believe in the revival of nuclear power, US mineral independence, and clean energy transition, UUUU offers compelling upside, but that comes with substantial risk. For more conservative investors, it may simply be too speculative.